Thanks. Okay, and forgive me, this is a bit of a long-winded question, and I'm going to give you as much time as you want to respond. But my question is, where am I wrong? I'm going to lay out a thesis, and I want you to tell me where I'm wrong, and it requires a little background. So I have worked with dozens and dozens and dozens of many of the top fund managers, mostly mutual fund managers. Some of them have been fund manager for the decade, and invariably, they may be up 70%. One literally had the fund of the decade down 70% the next year. What I have come to the conclusion of is no one fund manager really knows anything more than anyone else. Some people can get lucky 1 year, 5 years, 7, even 10 years. But I go into investing with the idea of it's about long term. Even though I'm over 60 now, I'm still trying to think of not how can I make a quick buck tomorrow or a stock market go up or do well for the quarter, but how can I accumulate long-term wealth? And I do think that's most people's history. Long-term financial stability, long-term family wealth, ideally generational wealth. And I think a lot of people really do want that. So here's my thesis. If you actually look at the track record of the most credentialed, most successful fund managers over a long period of time, 30 years, by numerous studies, at least 95% of them do not beat the market.
There you go.
To me, that says that, and I'm going to give you time to pick apart any one of my facts or assumptions. To me, that really says that the second you buy an individual stock, what you're essentially saying is you are smarter than that Harvard MBA, that Stanford MBA, who's got 3 Bloombergs on their desk, who's going to lunch with Marie Bartiromo, getting inside information. You think that your ability to pick a stock and research is going to be better than not one of those guys. And these days, it's still about 95% guys. You're saying when you buy a stock, and if you're buying a lot of stocks for your whole portfolio, you're not saying you think you can outsmart one of these Harvard MBAs who's managing a fund with billions of dollars in BlackRock. You're not saying you can do better than half of them. You're saying you can outdo 95% of them. To me, that is essentially an absurdity. So I personally do not I do not buy a single stock. I only invest in index funds because of that very reason. Yes, it could do well in any week or month or year, but as you mentioned, I'm interested in the more than 10-year period. And I think most people would be far better off never looking at CNBC, never looking at the financial reports, never listening to stock tips. If they simply, every single month, whether it's 20 or 30%, they put it into an S&P 500 index fund, they would save a fortune on fees, and they wouldn't be buying and selling and losing. And when people buy stocks, they panic and they sell and they lose. They say they won't, but they do. If you just put it in and never think about it, you would, by definition, and this has been proven, you would, over the long run, do better than 95% of the most successful financial managers in the world. So, plus you'd have all that time to build a different skill, create content where you're selling things, spend more time doing hobbies rather than, I know so many people who waste all this time day trading and doing things, and over a 5-year period, they forget beating the market, they lost money. And again, you mentioned Warren Buffett. This is what he recommends, and yet for the most part, no one talks about it. So tell me where I'm wrong in my logic.